So which broker are you using?
Legacy.
Legacy.
Legacy FX.
Unfortunately, I've never heard of that, because what I want to do is I want to start with a fresh copy of MT5, and then we can have a walkthrough and show you how to customize the whole platform and which tools are important that you need to be familiar with. So let me see which broker I can get the MT5 from. I'm just gonna get any broker that I can get a free copy of MT5, because the one I use already, I've already customized it. So I don't want to, I don't want to start with one that is customized already. I want you to see how to customize your platform and everything, your candles, and what every candle is gonna mean and all that. So I'm just let's see. FXCM. I'm just gonna see if FXCM can. Does it have MT5? That's the thing. No, they got MT4. MT4. There's no MT5 here. Otherwise, how has been the signals going?
No, I stopped that now. I haven't, since I started with you, I haven't touched the signals yet.
Okay, now that's good.
I'm just ignoring now.
That is good.
Yeah, because to watch the whole time, look.
No,
That's not.
that's not possible. You can't always be on the charts. You see, that's the thing.
Yeah.
Yeah. Let me see, XM. Right. So one other thing which I would like to share with you is the broker that you use. Make sure it's regulated and licensed, because most people they have that habit of just opening an account with a broker which they haven't done any background check on it. Because if you don't, and the broker is not licensed, or they are not licensed with your local financial institution, the FCA, then you might have issues later on, say probably when you want to withdraw, or maybe that broker is a B book broker. Remember, there's two types of brokers. There's A book and B book. The difference is that
A book, okay.
Yeah, there's A book brokers and B book brokers. The main difference is that one is a market maker, meaning most cases they trade against their clients. As in you find out that most times there's like a huge difference in price from broker A to broker B. So they trade against their clients, like the retail traders. Then a book
clients.
Yeah. Okay. A client, just like you're a retail trader, you're a client of what broker did you say you use?
Legacy FX.
So you're a client of Legacy FX. You see?
Yeah.
You are a retail trader, and Legacy FX is your broker. So there's different types of brokers. There's FX Pro, there's XM, there's JP Markets, which is now having issues with the FCA. I don't know if you follow through. And there's Paperstone. There's a whole lot of brokers, but some of them they are B book brokers, meaning they trade against their clients. You see? They make sure the clients lose money. Yes.
Okay.
They make sure the client lose money. Then A book, they don't trade against their clients because they link you straight to the liquidity provider. Remember, a broker.
There's A book.
Yeah, that's A book.
Okay.
It means you are not trading against the broker. The broker is only making money from you from the commission and from the spread. Remember the spread that we talked about last week, the difference between the buying and the selling price.
Okay. Okay.
Yeah, that's the cost of doing business. That's what the broker makes money from. But
A book, yeah.
Yeah, that's A book. And B book, most of them, they trade against their clients. They make sure the clients lose money. So it will be very difficult for you to make. If you do make money, to withdraw that money, it takes a whole lot of time, or there's like some funny requests that just happen. They'll start asking you funny questions. How did you manage to trade? How did you manage to make the money and all that? So you must always make sure that the broker that you are using is licensed.
Okay.
Yeah.
But they said to me they are licensed and all that.
Legacy. Where are they based? You said Legacy. Legacy FX.
Legacy. Legacy.
Yeah, I got.
Can you check for me?
Yeah.
If they are.
I'm gonna check on it, and then
Okay.
let you know. For
And
now,
okay.
let's just continue with the platform. So you can see already,
Okay.
I have installed. This is XM Global. That's a MT5 platform. By default, you've got your platform with this black screen and there's
The reps, the grid.
indicators and all that.
Yeah, okay.
Always good to have a clean chart. Remember, we are price action traders. We don't use indicators. That's one thing you must understand. We read what the price is telling us. We are price action traders. Indicators, yes, I'm not saying indicators are bad, but they only have one problem. They are lagging, meaning they react to what price has already done. So it's like you're making a decision with the price that's already ahead of you. So that's the main problem with indicators, is because they lag behind price. So the decision that you make, if you are trading using indicators, it means that decision is delayed.
Okay.
It's a delayed decision. So basically, this is the platform, and you can see like right here, this is your menu up here. I'm sure you're now familiar with everything here. And then this is your market watch. This is where you get your assets, your currency pairs, and on the navigator, this is where you get your accounts, your indicators. If you use expect advisors, you're also gonna see them here. And right at the bottom, the tab at the bottom, that's your toolbox, right? On the toolbox, that's where you get the news, the mailbox, the calendar, the alerts, and your journal, like your history, what you've been doing here. But what I would like to instill in you, so that you don't have there's too much information to process on the platform. And the main information that you need to be well aware of is the price. The rest, you can have a clean chart. So the market watch, you can hide it by just clicking the X button. You see, you can hide the market watch. You see, because the main thing that we need is the price action. What is price telling us? The toolbox, you can also hide it. Yeah. And if you ever need reference or to go back to your toolbox, you just come back to view, you scroll down, market watch, then market watch is going to come back. If you need the market watch to be on the display so that you can see it. And by default, can you see that right now I only have 1, 2, 3, 4 pairs on my market watch?
Yes.
Only 4 pairs. Yet there's a whole lot of currencies to trade from. There's lots of commodities, there's indexes that you can trade from. So to add that, you just right click and you go to show all. But now show all is not highlighted because I haven't opened that demo account. So let me just open quickly a demo account. Just open a demo account. I have to go to their website now. Let me just open a demo account quickly so that we deal with the live market data. XM. So I'm sure you've seen the charts that I also share on the group. The charts are like they're like clean. Yeah. Because I need to see exactly what price is doing. The rest I can always insert. So let me just open a demo account quickly so that MT5 standard load. Which one is to 500? Investment 10,000. 7. So I've created the demo account. Let me just log in quickly. It's the server here.
Incoming mail.
All right. So I've created a demo account, as you can see here. I've just put a demo account with $10,000. So now when I come back to Market Watch, I can now right click and select show all. So you're gonna see that all the other currency pairs, they've been what? They've been added.
Added, okay.
Yeah. Now I can close that and then I don't need the toolbox. Now if you look on the extreme top, just under the menu there, we've got all those icons there. I'm gonna try to go through all of them just one by one and which ones are important and which one we can remove that we don't need. Then we'll go to the chart customization.
Okay.
So the first icon, that's create a new chart. This is where you can create a new chart. This is like a shortcut to your market watch. So say for instance, I need to create a EuroCAD chart. I open a new chart. That's basic. That's self-explanatory. Then the second icon represents managing of profiles. Let's say you've got a certain portfolio of accounts that you trade. You've got Euro USD, USD JPY, and dollar index. That would be one profile. And then you have, say, gold, oil, and sugar. That would be a second profile. So you'll be switching your profiles using this icon here. So you can create a profile of the main currencies that you trade. Then you create another profile of commodities that you trade.
Okay.
Yeah, so that's the second icon. And then the third icon, the one that says show symbol list, if you click on it, it's also like a shortcut to your market watch. You can see all the currency pairs there here. This is, yeah, it's not much of a very important icon that you're gonna use. Then the third one, MetaQuotes language editor. This is where you want to create your own robots. Maybe further along, 2-3 years down into your trading career, you'll be in a position to create your own trading robot. So you create it using the meta editor. But for now, it's not an important part of the class. And then you've got register a virtual server. A virtual server is typically an example of, say, your own trading website. That's what most guys are doing. They register their own servers. And if it's my own server, I can create a real account that I'll call real when it's not a real account.
Okay.
Most people, they're getting tricked with virtual servers. People will be bragging with a virtual server account, yet it's not real money. It's just a real account. You can see that it's a real account on your MT4 and everything, but it's not a real account. So that's what most people are using, the virtual servers. But you can also create a virtual server for yourself, for yourself, so that you can learn. Then register account as a source of trading signals. That is, if you're offering signals, you can register your account as a signal account so that some other people can copy your trades. You see, so they'll be trading whatever, any trade that you take, other people will be copying your trades. Then you've got algo trading. Algo trading, this is where you use robots. You've got a robot that trades for yourself. You see, you don't have to trade, it will make the decisions for you and all that. Me, I'm a firm believer that it's always good to do things by yourself. You see, you must always be in control of what you are doing, always be in control of your equity. Yes, there are some robots out there that are making money, and there are some robots that do not make money. And then we've got the new order icon. The new order icon, this is where you open your trades. This one is a very important icon. This is where everything goes when you want to enter the market. So this is the first important icon that we're gonna come back to it to discuss the volume. Remember the volume, that's the lot size that we talked about last week. Yeah. This is where also you're gonna get the pending orders. So we're gonna come back to this once I'm done with the rest of the icons. Then next to new order, we've got bar chart. So we've got bar chart, candlesticks, and line chart. We've got bar chart, candlesticks, and line chart. These are chart types. So a bar chart, this is mainly used in America. They use bar chart, the open, close, and high, open, high, and close. Then here we use candlesticks. Candlesticks are more, they tell more about what price action is doing. Big bodied candles, they mean that there's more momentum, whether it's to the upside, if it's a bullish candle, if it's to the downside, a big bodied candle to the downside, it means there's more bearish momentum to the downside. And then we've got a line chart. The main use of a line chart, you're going to see that once we customize the platform, we're going to remove the bar chart. We're going to leave the candlesticks and the line chart there. The main use of the line chart is to determine your highs and your lows, right specific to the price point. You're gonna see the difference that the line chart has got with the candlestick once we have cleared up this background, this green line and everything. And then we've got zoom out and zoom in, self-explanatory. And then the following icon, arrange icons as non-overlapping. So this is where you have all the charts that you have opened displayed on your screen, and then if you click it again, If you maximize, then one screen is. So if you say you want to see what price action is happening on each and every chart, then you just click the icon to rearrange them. Then the following two tabs there, the one that's pointing to the right and the one that's pointing to the left. If you look at price on the chart here, let me highlight it. If you look at price right here to your extreme right, you see where I've pointed there.
Yeah.
Yeah, we've got $18.94. Right. I'm going to click the arrow that's pointing to the left. You see now the chart price is moved to where it's visible here. It was here before, but now it has come here. So it gives you space for you to focus on rather than it to be here. Let me clear up. Let me clear up and click again the left. You see, you can't see what's coming after. It gives you a better perspective to try and focus on where exactly can price go. So when you click the arrow that's pointing to the left, it moves your chart to your left. If you click the right, what it does, it allows you to scroll back. You see, you can scroll back in history of the chart. So in most cases, you just have all the tabs, the one that's pointing to the right and the one that's pointing to the left. You must always have them both clicked, selected, I mean, so that your price action is in line with your chart. Then the following icon, that one, the one that says save the active chart data as a picture. So if you click the save active chart as a picture, this is whereby maybe you want to share a chart with someone. You see? So you want to share the chart that you are watching. So and then you click OK. So then it's gonna open your browser, whether you use Google Chrome or you use Opera, for instance. I use Opera. You can see that the chart is now saved as a picture. Then I can share this chart with whoever I'll be sharing the chart with. You see? So that's the use of that icon, share as a picture. You find out that eventually when you're also starting to sharing the charts in the group, you'll be saving your charts as a picture and then you send it to the group so that it comes as a clear picture which everyone can see. Then we've got the cursor. This is from the new order icon. The cursor is probably one of the second most important icon on the platform. So this is the one that tells you, see, it helps you to navigate and it tells you what each and every candle is telling you. If you move the cursor to the closing price of any candle, whether it's a bullish candle, it means you're moving the cursor to the closing price. It will tell you the opening price, the high of that candle, the low of that candle, and the closing price of that candle. You see, if it's a bearish candle, it means you're moving the cursor to the closing price of a bearish candle, which is lower. So it will show you the details of the price action of that candle, the opening price, the high, the low, and the close. Then we've got the crosshair. The crosshair tells you the time and price. If you move the crosshair on the chart, to your right, it will be showing you the price. Right on the horizontal, it's showing you the date and time. So you find out that if we reference that to say, let's check on the 13th of June, what was the price of an asset on the 13th of June, 2 o'clock, you see? So you use the crosshair. Yeah. Then we've got the vertical line. This is when you want to draw a vertical line, and then this is when you want to draw your horizontal line, maybe your support and resistance or your supply and demand zones. Then we've got the trend line. The trend line is the one which we normally use. This is when you want to draw or connect two price points. The trend line is much better because you can manipulate it. You see, the vertical and the horizontal line, you just draw them on the chart, and you can't you can only move them. But the trend line, you can manipulate it, you see, to any price point that you want. Then we've got the draw equidistance channel. The equidistance channel is a channel whereby the lines, they're equal from each other. You see, they're like parallel lines, two parallel lines. So probably you'll be drawing a channel. Price will be trading in a channel. So you want to draw the channel like here. You can already see we've got a channel here which price action is following through. So you'll be highlighting this channel here. You see, so that's the use of the equidistance channel. Then we've got the Fibonacci tool. This is a very important tool, but for now, for you, it's still early for us to discuss the Fibonacci. The Fibonacci tool is used to measure retracement or expansion of a chart, whether it's from the high or from the low. Let's say you want to measure, you see, let me give an example. This high and this low, right?
No.
We want to determine, say, the 60% or the 50% or the 70% retracement of that swing high to this swing low. See, this is a swing high, that's a high formed, and then we've got a low, so that's a swing high to swing low. So we grab the Fib 2 and then we draw it to the from the high to the low, and then you can see 50%, 60, 61. These points here on the Fibonacci, the 23%, 38%, the 50%, these are used to determine your entry points and your stop loss and your take profits. You see, remember that question you were asking to say, how do I determine when to enter a trade? Yeah. Once we get to that class, which probably is like 2 classes from now, that's when I'm gonna explain in detail how you use the Fibonacci tool to determine your take profit and your stop losses and your entry points using the Fib tool. It's a very important tool. This one we're gonna leave it there. Once we customize, we won't remove it. Then we've got the draw text. The draw text is when you want to have like a reference point. Say I want to mark out this level as high, you see, so that I don't forget, you see. So I'm gonna write high and then place it there. So this is just for reference point. Let's say you are reading the price action and then you highlight that, okay, this is a demand zone. So you use the text tool for you to be able to remember the moment you just look at the chart, when you see that demand, then you know that level, you have marked it as a demand level. So it's for reference point, so that you don't forget. You see, that's what you use the draw text for. And then we've got the one that says draw arrow, and if you click on it, there's a whole lot of options that come. Got the thumbs up, thumbs down, this is also for reference. Arrow up and arrow down, it's also for reference. Stop sign, check sign, this is also for reference by yourself. You see, you can either choose to use an arrow up to determine an area where you expect to go long. Let's say you want to buy, you see, you'll be like, okay, if price reaches this level here where the arrow is, I must go into a buy position. You see, so you can use also the down arrow to determine, say, if price comes to this level, I must go into a sell position. You see, so it's just for reference sake. And then we've got the left price label and the right price label. So this, if we click, say, left price label, then you place it on the chart. When you place it on the chart, it's going to tell you exactly the price in relation to where you have placed it. Like now it's saying 1.31920. You see, if I move it, you see the price also changes. You see, the price also changes.
Yeah, changes. Okay.
So you use this the label, the price label, to determine. You see, let's say, okay, let me zoom in first. Let me zoom into the chart, and let's focus on this candle here. You see this candle here, right? So for instance, if I want to determine what is the closing price of that candle, I'm gonna grab my right price label, then I'm gonna click. You see, if I place it right on that candle, it's gonna snap off to the closing price, and then it's telling me 132,709. You see, so it's basically just for you to know what price point you are dealing with. Say for instance, if you draw a trend line, right? If I draw a trend line now, you see, this is my trend line, but now I don't know what is the price here. You see where the line ends? You see here? See where that line ended?
Yeah.
I don't know what price is that. So I'm gonna come and grab my right price label. Then I'm gonna place it right there. You see, it tells me that the price is 32 and 1.32870. You see, so that's what you use the price labels for. And then there's another toolbar which is missing here. That is the time frames, right? So I'm gonna insert it. To insert a toolbar, you just come to insert, to view, then you come to toolbars, and then time frames. Right. So now I've inserted the time frames. I don't like it here. I need it next to this. Yeah, right. This is where I need my time frame. So you see, it was right here on the left. I've just dragged it next to the arrows that we were talking about. So the time frame, basically, they are self-explanatory. So here we've got 1 minute, then we've got 5 minutes. So 1 minute, it means every candle on this chart represents 1 minute of
1 minute.
Yeah, price action. If you go to 5 minutes, it means every candle took 5 minutes to form. If you go to D1, it means each candle is a daily candle. If you go to a month, MN, it means each candle is a monthly candle. Yeah, so time frames are self-explanatory. So now on the time frames, there are some that are missing there. There's no H2, there's no H3, there's no H6, there's no H8, there's no H12, there's no 20 minute. You can add those time frames if you want. See? Those time frames, you can add them by right clicking on any time frame. You see, on that toolbar, the one for time, you can right click there and then you go to customize. You see, when you go to customize now, you can see on the customizing toolbar that pops up, we've got 2 minutes. The ones that are saying available buttons, those are the buttons you can add to the what?
Okay.
To the current time frame that are what? That are displayed. So for instance, let's say I need to add 2 hours. So I'll select 2 hours and then insert, select 6 hours, and then insert, select 8 hours, insert, select 12 hours, insert. You can see right at the top there, it's adding those time frame. You see, I now have H8, H6, H2, H12,
Yeah, okay.
but now they are not in order. You see, now where it says to the right now, it says selected buttons. Now, my advice for you, try to focus with higher time frames. Don't focus with 1 minute or 5 minute time frames, or even 15 minutes. But 15 minutes is always good because that's where you define. If you want to be more precise with price action, you use the 15 minutes to define your entry points and your take profits and stop loss areas. So I'm going to remove the 1 minute. So you select 1 minute, then you click remove, select 5 minutes, then remove. And then to put them in order, you just drag. Obviously 12 hour comes after daily, 8 hour comes after 12 hours, 6 hours comes after 8 hours, then 2 hours comes after 1 hour. You see, so now they are in order. Then I'll just click close. So you can see now my time frames, they're now starting at 15 minutes, 30 minutes.
Okay.
I no longer have like 1 minute because I don't make use of 1 minute. 1 minute price action, that's gambling. You see, that's gambling with price if you're gonna use 1 minute. Yes, there are scalpers that use 1 minute and they make money, but for me, I don't usually advise trading on the 1 minute. Number one, it's stressful. It can affect you emotionally, and your discipline is gonna go out of the window if you use the 1 minute, because you don't know what's gonna happen the next minute in terms of price action. So now there are some buttons that we don't need here, like the register virtual server. The reason why I'm showing you all this, Jerome, is so that you have a clean chart with the icons that you only need to focus on. The end result is efficiency. You know that, okay, I need to draw a trend line. The trend line is there. I need to zoom out. Your zoom out is there. I need to open a new trade. Your new trade icon is there. You see, because you need to be efficient when you're working on the chart. You don't want to be thinking about, okay, how then do I do this? How do I do this on the chart? Because price will be moving. Price is not going to wait for you. You see? So now we are going to remove this virtual server register account as a trade signal. We're going to remove the metacodes editor. So what you do, you just right click on that tab there, and then you go to customize. So the selected buttons, we don't need meta editor, so we're gonna remove it. There's a whole lot of buttons. So once the others, you can even add them, you see. But this takes also a bit of time from you. When you are free, then you just exclude. The bar chart, I'm going to remove the bar chart. I don't need it. And then tile window also, I'm going to remove that. Auto scroll, chart shift, and save as a picture, I'm going to leave those there. You see, they'll be remaining. So now you can see they've been removed there. They're no longer available. Now, coming to the chart now, this whole black thing where everything happens, right? Those options that I have, all the options that I've explained above there, you can also access them by just right clicking on the chart. You see?
Okay.
Yeah. You see all those bar charts, candlesticks, line charts, time frames. You see all those time frames, they're also there. Then we've got templates, right? We're going to come back to template in a moment. Then we've got grid, auto scroll, chart shift. You see those icons that are at the top there, you can access also them using the right click option on your chart. So now we are going to customize our chart. What I'm going to do is, you see I've got 4 charts open. I'm going to close them here. Let me just so that I work with one chart. Right. So now I've got one chart open, which is Euro USD, and it's a hourly chart. Let me just select daily chart. Now, when you want to customize the chart, you right click on the chart, then you go to properties. Right? Now, when you get to properties, we are on candlesticks. That's the chart that we are going to use. We are on candlesticks. Now, we need to go to the colors tab. You see? Once we go to the colors tab, what we need to focus on is the background, the foreground, the grid, bar up, bull candle, and bear candle. So for the background, my advice is after we are done with this, you must also do the same on your platform.
Okay.
Yeah. So for the background, we're gonna use the white background, right? And for the foreground represents your price points, the ones to the right. You see this price area, ones to the right margin, and then
Okay.
the foreground, and then the date and time on the horizontal time frame. So we're foreground, we're going to make it black since our background is white. And then the grid,
Okay.
yeah, the grid, we're going to make it also black. And then the bar up, you see, when it comes to color, it's more of like a personal preference. You see,
Okay.
it all depends with you also. You see, what you'd like your bullish candle to be, what color reference you would like your bearish candle to be. So for instance, personally, my bar up, I prefer it to be green.
Okay.
So bar up, I'm gonna put green. And then bar down, I'm gonna put black. And then bull candle, the bull candle, I'm gonna put lime. I need it to be lime. That's the bullish candle, meaning price is appreciating in what? In value. And then the bear candle, I'm gonna put black, meaning price is depreciating in value. And then line chart,
Okay.
I'm gonna put black. And then the rest volume, we're gonna leave it at default lime green. The bid price, that is our buying price, I'm gonna leave it at gray. The ask line price, I'm gonna leave it at red. And then the last price line, I'm gonna leave the rest. I'm gonna leave the stop loss levels, I'm gonna leave them at red. Then I'm gonna click OK. Now you can see
Okay.
our,
Just
yeah,
the bar down is what color again?
okay. The bar down is black,
Okay.
right? You can see there. Bar up is green, bar down
Yeah.
is black, and then the
Black.
bull
Yeah.
candle is lime.
Yeah.
You got that right?
Yeah.
Yeah. Then you click OK. Once you have clicked OK, you can see now the chart is what is starting to make more sense.
White.
But we still have, you see
Okay.
that moving average, the red line there on the candlesticks. We need to remove that. To remove that, you just right click and then you go to indicators list. You can see we've got average. We're gonna delete that. And then we also have, I'm gonna clear up these arrows that I've been drawing. To clear that up, you come to, you right click and you go to object list. You see, object list, I'm gonna select that vertical and delete it. And delete this guy also. I'm just deleting those arrows that I've been drawing. Right, and then I need to clear. Right, but now you can see our grid still is active, and I'm gonna hide the grid. The grid is for you to be precise in terms of price. If you want to be more precise, to say, okay, this candle here has moved already, say 50% of the grid box, but most times we don't use the grid. So to hide the grid, you right click again. You see the right click option is very useful. See, because it's a quick way to get to the action that you want to do on the chart. Then you can see where it says grid there. I'm gonna click it. You see now the grid is cleared.
Gone.
Yeah.
Okay, it's clear.
Now we got our price action. You see? Now we have our price action on the chart. It's now a clean chart where you can clearly see that, okay, from here, see this candle, price has been going to the downside. Same applies on this candle, price has been moving to the downside, meaning there was bearish momentum. And then here you can see price moving to the upside. That was a clear bullish momentum. Same applies to the past 3 8 hours candles, because I'm on an 8-hour time frame. You can see since market opened today on Euro USD, the past 16 hours, 24 hours, I mean, price has been bullish. You see, you're now interpreting what price action is doing. So you can see already since the market opened today, since the Asian session, that's the one that started at 12 midnight, price has been going to the upside.
Sorry.
Yeah. So now, how then do you preserve this chart to say, okay, once I open, say, let me show you. Once I open a new chart, you see, if I come here and open, say, USD JPY, you see USD JPY is still with that black background and the candles. So how then do you preserve this as your default chart, that whenever you open a chart, every chart is like this? So what you do is you right click on the chart. When you right click, there's the template option. You see the one that says save template. You select that. You select save template. Right. The name now, the name that you use is default. You just type default. Then you click save. So it means this chart here, the one you have customized and everything, that's now the default template. So every time you open, let's say I open now British pound against US dollar, you can see already it comes default with my settings, with my personal customization, so that I'll know instantly the moment I open a new chart, I'll see exactly what price is doing. You see, for instance, let me open USD ZAR. You see USD ZAR comes automatically with my customization, and I'll know exactly what price is doing. You can already see the past 24 hours USD ZAR has been bearish. You see, meaning the ZAR is what has gained against the dollar. The dollar has lost. You see? Yeah. So that's how you customize your chart. And it also makes it easy now when you are using the cursor. You see, now I'm gonna move the cursor, say, to this current candle here, current H8. Okay, let me use daily. Right, the current daily candle. When you move the cursor to the current price, you can see the open. It means the open for today was 1.18169, and the price went as high as 1.19189, and the low for the day is 1.18102. The closing price, okay, market hasn't closed yet, it's still 24 past 10, it only closed at 11. Closing price is still 18997. So you can see already that things become clear even when you use the crosshair. Remember the crosshair, the one I tell you that it tells you the price and the time. Now when you want to calculate the number of pips, the crosshair is what you use. You see, when you want to see, okay, how many pips has Euro USD moved today, so you place the crosshair from the opening price, right, or the low price that it has reached, and then you click and drag to where the price reached. It reached here, you see. So now you can see there where it says 1,104 points. You see, 1,104 points. What that means is, when we read the pips, remember those when we're explaining the pips in terms of the colors, where we had the purple color, the red color.
Yeah.
You remember that one?
From last, yeah, okay.
So now, when it says 1,104 points, disregard the last digit, in this case, which is 4. You disregard that last digit. The remaining 3, those are your total number of pips that the current pair has moved. So it means Euro USD today has moved 110
pips.
You see? That is a lot.
Okay.
That is a lot of pips for one day. But yeah, of course, there's a lot of fundamentals going on in the market right now. Yesterday, we had Powell speaking at Jackson Hole, and then today we had the Prime Minister of Japan resigning. You see, so that's why the market has been up and down. So that's what you use the crosshair for. Also, you can determine like how many pips are in a range, like from this high to this low. You can see there's like 214 pips. You see, so that's what the crosshair tells you. It also tells you the number of pips that the currency pair has moved. Now I'm going to go to a H4 time frame and zoom out a bit, right? Now we are going to come to the new order tab. This new order icon, the one where you open the trade. By default, you open a trade with market execution, meaning it's an instant you want to get into the market and trade.
Trade, okay.
Yeah. Here where it says volume, this is where you specify your lot size. Remember, the volume is equivalent to the lot size, whether it's a micro lot, mini lot, or standard lot size. So for instance, let's say you want to open a mini lot, that's 0.01 lot size. That's a mini lot. Then if you want to open a micro lot, that's 0.1. You see? So you'll be specifying that if you want to open a standard lot size, that's 1 and above. You see? 1 and above, that's a standard lot size. You see? So a micro lot, 0.1. So let's say we want to buy 0.1 lot size of Euro USD. Maybe you want to buy or want to sell, right? Then here, this is where you specify your stop loss and your take profit.
Stop loss and your take profit. Okay.
Yes. Now, your stop loss and take profit in relation to supply and demand, it's always good. Let's say, where are we? Let me see, Euro USD. This is going to be a hypothetical example. Right now, we are approaching this level here. Let me just highlight it. We are approaching this level here. This is where we are heading right now. So we'll be expecting price to bounce to the downside. So, yeah, I'm just going to say let's open a sell trade right now. So if I'm going to sell at current price, which is here, right? It means I need my stop loss to be above this high or above that high, right? Because I won't expect the price to get to that level before it drops. You see? If it gets to that level, it means my trade is going to be in a loss. Now, how do you determine the price, right? This is a hypothetical example. You grab your crosshair. Remember the crosshair. While your trade execution window is still open. So now I'm gonna use the high of this candle here. You see this bearish candle here. You see this one. The last bearish candle that we have, that black candle before the 2. So from its high, I'm gonna count, say, 10 pips, right? 10 pips that are coming in. If you look to the right there, it's 1.19291. You see, 1.19291. That becomes my stop loss. 1.19291. That becomes my stop loss because I want to sell. Remember, I want to sell. meaning my sale is above my entry price. Then my take profit, since I'm selling at this current price, right? My stop loss is 1.19291. That's 26 pips, meaning I have a 26 pip stop loss. You see?
Okay.
That means my target should be what? At least 1:2. You see? So 26 times 2, that's 40, that's 52. So that means I need at least 52 to the downside. 2 pips to the downside. They're coming in at 1.18500. You see? 1.18500. That becomes my take profit.
Big profit.
Yeah.
Big profit.
Then I'll click on sell. You see? So this is how you specify your entry points. But of course, there's more to it on how you determine your stop loss and take profit. So once we are on the supply and demand part, that's where you're going to see how you determine your stop loss, how you determine your take profit.
Big profit.
Yeah. So same thing if you want to open a buy position. So now we've opened a sell position on Euro USD. That means USD JPY we can buy. So I'm going to open a USD JPY chart. You see, USD JPY is dropping and it is approaching these lows here. So I'm going to click again on new order, right? Right now I want to buy, meaning my stop loss is going to be to the downside, right? My stop loss is going to be to the downside. Yeah. So how then do I determine that? I'm going to click my crosshair. So this is the lowest low, and then I'm going to need at least 10 pips. 10 pips, they're coming in at 104,972. So that's my stop loss, 104,972. And then my take profit. So from the current entry price to 104,972, that's 38 pips. That means at least my take profit should be at least, so that's 38. So that's 38 times 2.
Times 2.
Yeah. So I need at least 80 pips to the upside.
Okay.
Yeah. 80 pips to the upside. They are coming in at 80 pips to the upside. They're coming in at 106, 160. You see? 106, 160, right? And I'm still gonna buy using a micro lot, 0.1, right? The reason why I'm buying USD-JPY, hypothetical example, when you sell Euro USD, you are going to be looking to buy USD-JPY. You can't sell both of them at the same time. One of them is gonna lose.
Oh, okay.
Remember the base currency and the court currency. Remember from last week?
Yeah.
So
one is to sell, one is to buy.
So
do the opposite.
Yeah, in terms of Euro USD and USD JPY, they are not correlated pairs. They are opposite correlated, meaning if one is going up, the other one is going down. So now here we're gonna click buy. You can even see the charts themselves. Okay, let me go to view. Let me go to view. Okay, let me do this. Window. I need to tile my windows. You can even see the charts. Right now, this is so Euro USD is on H4. If I come to USD JPY, H4. Can you see how they are opposite?
Yeah. You can see it.
Yeah. So that's how you open, say, a buy and a
sell
trade with using market execution. Like you're going instantly into the trade. But now let's say you want to open a pending order. I'm gonna go to USD JPY to British pound. I mean British pound against the US dollar, right? I'm on an H4 time frame. So now, using I'm gonna come back to new order and then pending order. Right, on the pending order section, we've got different types of pending orders. We've got buy limit. It means you are expecting price to drop down once it reaches a certain level of price that you expect it to go up. That's where you're gonna place your buy limit. Then we've got sell limit, right? The sell limit is whereby price is dropping, price is going up, I mean, right? And there's a certain price that you expect the price to what? To reach, but not going any further high. So you'll be expecting to sell. That's a sell limit. A buy limit, price will be going to the downside. Then when it reaches a certain price point, you expect price to find resistance. You expect price to reach a demand zone. You need to be a buyer. You see? Did you check the PDF file that I sent you? We talked about this.
Yes.
PDF file
Yeah,
that I sent. Yeah. So
Yeah.
this is where you determine whether you're gonna be using a buy limit or a sell limit. A buy stop, it means price is moving to the upside, but you expect price to keep continuing going higher. That's
Yeah,
where
okay.
that's where you use a buy stop. I'm gonna do an example quickly. And then sell stop, price is dropping, but you expect price to keep dropping, but you don't want to enter at the current price. You want to enter further when it goes lower. So that's when you use a sell stop. So I'm gonna start with the sell limit. A sell limit, for instance, I'm here on British pound. Let me go to a higher time frame. Let me go to a monthly chart first. Okay, I'm just gonna close this. Now this is a monthly chart for British pound against US dollar. Right. So now if you look, I'm just gonna draw a horizontal line at this price here. You see this high? Can you see that high? Yeah.
Yes.
So I'll be anticipating price to come up here, but eventually drop to the downside because I expect price to find resistance here.
Resistance.
Yeah, I expect price to find resistance. So now I'll be telling myself, okay, what if I'm not on the charts? I'm busy somewhere and then price reaches that area. You see, it means I'm gonna miss that trade. So in order for you to be in the market when price reaches there, that's where you use a sell limit, right?
Okay.
Yeah. For a buy limit, it's the opposite.
Opposite.
Yeah. Let me just clear up. Now, let's say we use this candle's law here, that candle. So a buy limit, it means you'll be expecting the current price. When it drops down here, you want to be a buyer to take the market to the upside.
Up again.
Yeah, that's where you use a buy limit. So I'm gonna show you, we're gonna place a sell limit on GBP USD right now. So I'm gonna click my new order, right? Then here we select pending order, right? Now I'm gonna grab my crosshair, and then this line here is coming in at 135, 135. So volume, my lot size, I'll still leave it at micro lot 0.1. Then here where it says price, this is where you determine the price, the entry price. Like you'll be saying, okay, if price reaches, what is this here? 135, 135, right? 135, 135. If price reaches 135, 135, I want to be a seller. Remember,
Seller.
we're placing a sell limit. You want to be a seller when price reaches 135 because you expect price to find resistance because there's a lot of supply at that area, right? And then your stop loss, if your entry is 135, I'm gonna put a stop loss of remember we're on a monthly chart. I need a stop loss of say I'm gonna put 50 pips. Okay, let's just put 60. 60 pips is coming in at 35,722, right? 35,722. That's 60 pips stop loss. So if we are entering at 135, if we've got a stop loss of 60, a return ratio of 1:2, we need at least 120 pips to the downside. We're placing a sell limit. 120 pips to the downside. They're coming in at what is this price? 120. They're coming in at 33,941. So that's 1.33941. That becomes my stop loss.
Take profit.
Yeah, my take profit. Take profit. Yeah, correct. So that's 33,941. So that guarantees me at least 120 pips to the downside. So
downside.
yeah, and then we've got the expiration. You see, you can determine whether you want the pending order to expire. So for instance, you'll be like, okay, if this price is not reached within the next, say, 2 days or 7 days or 1 month, if price does not reach there, then this pending order must expire. It must not be active. It gets cancelled. You see? Because it means whatever you were anticipating, the market did not do that. You see? So you can specify here whether you want the pending order to expire today, right? Or you want to specify a certain time, date and time, you see, or specify the day. So now today is what, 28th August. So we can specify that, okay, if price does not reach 1.35135 by Monday, then this pending order must what? Must expire.
Expire.
Yeah, it's not going to be active. So once you have specified all that, then you click place. Now you can see already sell limit has been placed on GBP USD at 1.35135 with a stop loss of 1.35722 and a take profit of 1.33941. Then you go done. Now, how then do you see that your pending order has been triggered? You see here on your left, it's still saying sell limit 0.18, 1.35135, right?
Okay.
When it has been triggered, it will be exactly like the current trade that we placed on Euro USD to be saying sell 0.1 because it's now an active trade. That is if price reaches that level. Also, you can see your pending orders on the toolbox. Remember that tab that was at the bottom, the one we removed when we first started.
Okay. Yeah.
We're gonna go to view and we go to toolbox. You can see there. Where am I? We've got our British pound here. That's our pending order placed. See there. This is our pending order, and these are our current trades that we opened. Remember those 2 trades that we opened. So you can even monitor it from that area also, which is the toolbox. So now,
and say now for instance, I'm saying for instance, you are in profit now, but you want to get out of the trade. How do you
close?
Yeah.
You click the X button. You see right now the trades are running in a loss. You see, the euro.
No, I mean, say now it is now triggered, then you in a profit now. How do you like close it?
Okay.
Before you even reach the take profit.
Okay. Let me show you with there's a trade that we opened in the group. Did you read the messages from the group today?
Yeah.
Yeah. There's a Euro USD trade in the group.
Okay.
You see this? This is now FX Pro MT5. You see there's a trade here. We sold Euro USD at 0.1. That trade is in profit. You see there? There's like $12.30 profit.
Okay.
I can just click that X button there. You see next to the profit.
Okay.
You click that, the trade is closed. Means the money is now in your
account.
Yeah. That's how you close the trade.
Okay.
You just click the X button.
Okay.
Even if you are in a loss, if you say, okay, no, I've been wrong, USD is not a buy at the moment, you can click that X button there. You see?
Okay.
Then you just accept.
Close.
You see?
The loss.
Closed. You see? The trade is closed just by clicking that X button. If you are on the phone now, on the phone you just have to swipe to your left, then you click on close, or tap and hold, then options will come, and then you can close the trade. Yeah, that's how you close the trade. So now let's open a buy limit on USD since I've already closed that buy example that we did. So now we're going to open a buy limit on USD We have already done a sell limit on GBP USD. So the same thing applies when it's a buy limit. You have to determine where you expect price to go. Okay, let me just close this a bit, then go to a monthly chart. Okay, let's go to a weekly chart. Then let me grab my horizontal line too. So I'll be saying when price reaches last week's low, if price does drop to this red line, I want to be a buyer, meaning
buyer.
Yeah, I expect price to find support and then go to the upside. That's where you use a buy limit. You see? That's where you use a buy limit. So now let me open the new order. Then we go to pending order, buy limit. You see, the buy limit, the sell limit, like the pending orders in general, they help you to set your trades when you really know that you're not going to have time to be sitting on the charts. You see? So you set your buy limit, your sell limits. If you are expecting price to do something, you set them up. Then you can carry on with other things in life. You see? You can't always be stuck on the charts. You go cycle. You see? So now, well, let's place a buy limit. We're going to place our buy limit at 105.093. Still micro lot 0.1, so 105.093. You see? And then our stop loss, if I'm gonna sell it here, I need say 30 pip stop loss coming in at 104.781. You see? So that's a 30 pip stop loss coming in at 104.781. So I've got a stop loss of 30 pips. Then if I'm going to enter here, I need at least 60 pip to the upside, coming in at 105.71. So that's 105.710. You see? Then expiration, let's say I want this to expire next week, Monday. If price does not get there by next week, Monday, of which it won't, because market is closing now in the next 10 minutes, Then we click on market is closed already. Which page is this?
Yeah, market is closed.
USD JPY. Yeah. For the yen, the market is already off now. So that's the same thing, you see. If market was still active, it would have already placed the what? The pending order. Yeah, that is for buying. So you must always try to practice. Yes, we have got other options here: buy stop and sell stop, right? So for a buy stop, it means, okay, let me just close this and illustrate. For a buy stop, I need price that's going to the upside, right? For a buy stop, it's the opposite of a sell stop, right? A buy stop, it means price is moving to the upside, but you as a trader, you want to open your long position, you want to open your buy position a bit further high. Already you know that market is going to the upside, like on GBP USD right now. You can see that market is going high. You see, the last 2 months market has been bullish, right, on GBP USD. So you want to open a buy stop. It means market is going to open a buy position but continue going to the upside. So it will be something like this. Let me illustrate with my lines now. So this would be like your entry price, right? Okay, let me clear and start with a blank chart. Let's start with a blank chart. So let's say you want to open a buy position somewhere here, right? So you'll be expecting market to come trade to this level, like it continues with its up momentum. When it reaches there, you as a trader, you'll be saying, no, market is gonna continue going high. That's a buy stop. If it's to the downside, right, it means market is going down. So you'll be expecting, when price reaches here, you're expecting price to continue going down. That's where you place a sell stop. You see? Yeah, a sell stop. It means when price reaches that area, you are in a sell position, meaning you expect price to keep going further down. If it's a buy stop, it means you are expecting price to reach a certain price going to the upside, but continue going all the way up. Normally, a buy stop or a sell stop, you use it when price is trading at a demand zone. Most people that use the breakout strategy, you see, they use buy stops and sell stops. So you'll be anticipating price to break away from a strong area of demand. You see, like here on GBP USD, let me clear up. You see, on GBP USD, we've got this area here. You see this area? That's an area of strong demand, right? So you as a trader, when you look at that price action, because you don't know when market is gonna break away from this structure here. We don't know that, you see. We wouldn't know, but you can place a buy stop once you see this movement going to the upside, right? So you'll be saying, okay, if price reaches here, open a buy position to continue going higher. You get my point?
Yes.
Yeah. Same applies with the sell stop. Like this range here, the one that I'm highlighting now. You wouldn't know because you can see already 1, 2, 3 months. There's just a range. Price is in a range. Yet you'll be anticipating market to go to the downside, but you wouldn't know when it's gonna go to the downside. So you open a sell stop at this level here. You open a sell stop in anticipation for market to continue going low.
Down.
Yeah. You see? So that's the main use of buy stop and sell stops. You see, they get you to jump on board a momentum which is already taken off. You see, so you'll be like definitely sure that okay, no, now we have a clear confirmation that the demand zone has held up, a clear confirmation that a supply zone has held up. So price is now going to the downside in the case of a supply zone. In the case of a demand zone, you would have a clear confirmation that the demand zone is held up. So now price is going to the upside. You see, so that's where you use the buy stop and the sell stop. I hope that is clear to you.
Okay.
So that's like the most basics, like the most general things that you are going to be doing on the charts. The drawing tools, you are going to be using those more often. There's one drawing tool that I need you to add. You see here on the horizontal line, the vertical line, the trend line, the equidistance channel. You see that tab?
Okay. Okay.
You must add on your platform. You must add the rectangle. You must insert it. You see, so you right click the tab, you go to customize, then you add the rectangle and place it next to the trend line. The equidistance channel, you can remove that. You see, you can remove the equidistance channel and then close. You see this, that guy, the rectangle.
Okay.
That is going to be one of the most tool that you are going to use, and make sure fill is always selected so that it's a solid rectangle color. Okay, I don't need red. Red is too bright on me. I need gray, because this here we are going to use it to be drawing our supply zones and our demand zones. Like for instance, let me open a new chart. This is what we are going to be doing now in the next class. Let me open USD CHF. Then I'm gonna go to a daily time. Okay, let's start with a weekly time frame. Yo, this thing has got a funny price action. Let me see which one should I work with. USD CAD. Where's USD CAD? USD CAD. Let's see, daily, weekly. Right, daily. Right. So now this is USD CAD. The rectangle 2. In the next class, this is where we are going to be. I'm going to start to introduce you now to the supply and demand, like how you are going to be trading, how you define your stop loss, how you use the Fibonacci tool. But before we get to that, once we have started doing our supply and demand part of the course, the rectangle tool is the one which you are going to be using in most cases to define your supply zone and your demand zone. You see, supply is always to the upside, where your resistance is, and demand is where your support is. The main difference between supply and demand and support and resistance is this: the way price action reacts to a level. You can already see we've got a support here. You see, this is a weekly chart for USD CAD. You see, we've got a support level, but the candles themselves, they are different. Some they are big bodied candles, some they are small candles. For instance, can you see this green candle here? Hello? I think you have broken up a bit, but I'm just giving you a brief intro on what we are going to be discussing in the next class. So we are going to be talking about supply and demand more as we go, because I've already done the basics with you. You now know the basics, and then now you know how to work around on your platform. So in the next class, you can hear me?
Yes, sir.
Yeah. So in the next class, we are going to be starting on the basics of supply and demand, and the Fibonacci 2 on how you determine what's what. And what I was saying is the rectangle 2. You see, there's the candles. They tell a story. Let me go to say H4. Let me go to, yeah, now we are on H2. Let's go to H1. You see, the candles, they tell a story. You see, like for instance, this candle here, we are on Euro, we're on USD CAD, right? You see this candle? Jerome, are you there?
Yes, yes, I'm listening.
Right. That candle there, the moment you see that type of a move, this candle here, it moves massively to the upside. It takes out 1, 2, 3 candles. This is a hourly candle. It takes out the price action of the previous 3 hours. You see? It When I say it takes out, it means it closes above.
Above, okay.
Yeah. It closes above. So what you do, let's say you are a short-term trader or probably a scalper. That is a good, clear definition of a demand zone. So you grab your rectangle 2, you see, and then you draw from the opening to the closing of that candle. You see, the moment you do that, when price returns, you see, when price returns to where that candle closed, you look to be a buyer, right? Now, can you see now the last H1 candle, the one from 10 to 11? I'm gonna grab my crosshair now. The crosshair to the last candle that opened at 10 o'clock, which just closed now at 11. You see, it came right into where that candle, remember this big candle that I've highlighted? It dipped in, but instantly moved to the upside.
Okay.
That would be a buy trade, which you could have get 16 pips. You see, with a standard lot size, that would be $160. With a micro lot size 0.1, that would be $16. You see?
Okay.
So this principle is what you use. Same applies. I'm just giving you like small introduction now so that you've got something to think about. You see, from the upside, you've got this candle here. It takes out 1, 2, 3, 4, 5, 6, 7 candles. That's 7-hour price action that has been taken out by one candle. You see?
Okay.
Now, you as a trader, when you watch that kind of price action, just grab your rectangle 2. That's your supply area. You see?
Okay.
So when price comes back here to the closing price of this candle, which massively moved away and closed, take out all these candles. You need to be a
seller.
You see?
Okay.
But there's more to it now. It's not just a case of saying, okay, I've got my supply zone, the price is now reaching my supply zone, let me sell. No, there's a whole lot of things involved now. There's bias, like higher time frame bias that you have to consider. Like for instance, USD CAD. If we go to a month, let me show you. Now we are on a what? This is an hourly candle. When I say bias, I mean the direction. which the asset is
Okay.
moving to. If you look at USD CAD is in a bearish bias. It means it's moving to the downside. It's moving to the downside. Yeah, but approaching what? A strong area of demand. So it means you wouldn't have been looking to buy USD CAD. You'll be looking to what? To sell. Remember, higher time frame always wins eventually. So now, if you go to lower time frame, it means you'd have been looking to sell on each and every supply zone that you can see. You see, like here, in this area here. When price trades up here, you see from where it is right now, when price comes to this area, meaning somewhere here, you'll be looking to sell because you expect this zone here. You see this candle which massively moved away from this range.
Yeah.
That's your supply zone. So you'll be expecting price when it comes back to that. You see, I've just used the rectangle 2. The rectangle 2, you're going to use it very much. Let me just extend it also. Right? So when price comes back into that gray shaded rectangle which I have drawn, you look to be a seller. You see, because USD CAD is in a bearish momentum, so you must always be looking for short trade. Yes, you can look for buy positions, but they are risky. It will be risky. So now, if you go to say Euro USD, right? Let me just clear up and wrap up. And then you go to a monthly. You can see Euro USD on a monthly chart. It's in a bullish, bullish momentum, meaning sell trades are not ideal. You'll be looking to buy, but you buy from where? From a demand. You see, you buy from a demand zone. So when you go to a lower time frame, it means you are looking for those big bodied candles that massively move away from a certain area. Like for instance here, see, this is just a hypothetical example. You see this candle here, this guy. You see, that's the one that took out this whole range of price action. This candle, this green candle here, this one, price closed above, then rallied away. Then when it came back, you see here, you'd have been a buyer to the upside. And with Euro USD now, this is a what? This is H2 price action. I'm going to grab my crosshair too. The moment it comes back into this range, if you had bought Euro USD, that's already 30 pips to the upside. You see?
Upside.
Yeah. So next week, we are going to start on this concept. We are going to first do mostly on supply so that you understand perfectly, because it takes time. And then we move on to the demand part of the course. So yeah, I think that's pretty much about it for today. I don't know if you have any questions or something. I'm sure you now understand the platform.
Yeah. Not at the moment.
You must always practice on the platform. You see, play around.
Okay.
Yeah, switching from time frames. You see how the bias is. You start from a monthly, you go to a weekly, you go to a daily. You see, you define, especially those big candles. They are very crucial. Those are the ones we are going to be focusing on. The big candles, that's what we call smart money. You see, that's where the big guys will be either selling or buying. When price massively move. When there's no movement, like these small body candles here, when there's no movement in the market, it means there's no volume. You see, when there's low volume in the market does not move. So next week we are going to start on our supply and demand section of the course, and then we carry it from there. Do you have any questions?
Not at the moment.
Not at the moment,
yeah.
Don't sleep now. You must check out the market is closed.
Okay, yeah. Yeah, okay,
it's Friday.
Yeah.
All right, my brother. Thanks very much.
Okay. Okay, thank you very much too, sir.
I'm going to upload this recording also just for your reference sake. Say maybe you want to repeat something, and then I'll send you the link.
Okay, sir. Thank you very much.
So yeah,
Hello.
have a great weekend, my brother.
Okay, you too, sir.
All right, thank you.
Okay, bye.
All right, bye-bye.